viewers. I'm Dr. Velavan, Faculty School of Management, Sastra University. Today also, in this session also, we are going to discuss about the accounting entries under GST. In the previous session, we started to discuss what is accounting entries, what are all the output supplies and services, what are the input supplies and services, and output and advances, the reverse charge mechanism, and the entries to be passed for CGST, GST, everything we have discussed. Okay. In the continuation of the previous session, now we want to discuss the inward supplies. These accounts are required to captured to reported the inward supplies under various categories in the GST are returned to. That is very, very important. So we have to pass entries for the following as per GST are returned to. Inward supplies registered within the state and outside state. I mean intra and inter. Inward supplies unregistered dealer. Inward supplies composition taxpayer. Inward supplies exempted. Inward supplies non-GST. Inward supply nil rated. Inward supply means purchase. Okay. So the above accounts has to be created for each registered number in case if you have a presence in more than one state. Here already we discussed the same point in the registration. You see, suppose you are doing business in Tamil Nadu only, but you have a business place in Tamil Nadu in 3 different cities. One is Trichy, another one is Chennai, next one is Madurai. So now you have to register only in Tamil Nadu. Even though you are doing business in different place in Tamil Nadu, you are using only a common PAN number, because we have to use the PAN for registration. They give PAN based registration number. So here you have to register only in Tamil Nadu. Even you are doing business in 3 different cities in Tamil Nadu, you need not register in Trichy, Chennai, Madurai again and again, because you are doing only intra-state sales. Okay, this is called intra-state sales. Intra-state trade. Okay. When you are doing intra-state trade, when you are doing intra-state trade, you need not register in all business place within the city. You have to register only in Tamil Nadu. In other case, suppose you are doing business in India, in different states. Take an example, Tamil Nadu, Kerala and Madhya Pradesh, and also Delhi. So when you do business for all the 4 states in Tamil Nadu, you have to register each and every state separately. So here separate registration is required. Separate registration is required. Okay, that's all. So this is what they are telling here. The above accounts has to be created for each registration number in case if you have a presence in more than one state. This is applicable for this one. In case of you are using any ERP, resource first, you can explore the usage of the subledgers and whatever name you call, it is the account level. Okay, this is very, very important. Okay. So now we are going to discuss about the entries of the different outward supplies as well as inward supplies. Okay, so what is the entry, or what are the entries we have to pass for each and every transactions, supplies, both inward supplies and outward supplies. Now we have to see the entry, then we solve one problem. Okay, practical problem. Based on that we will okay, conclude. This is transaction accounting entry. Outward supply, sales within the state. So this is intra-state. But here you have to keep in your mind, when you transfer goods within the state, you have to charge two. One is CGST and GST or UTGST. When you supply goods to outside state, now you have to charge IGST. This is very, very important. Okay, so outward supplies, sales within the state, debtors, account debtor. Debtors means customer, the person who bought goods from you. Debtors to outside suppliers. Debtors to outside suppliers, to output tax GST, to output tax GST. Here outward supplies, not outward suppliers. Outward supplies are sales. Sales. Simply you write sales here. Name of the party debit, sales. So outward supply means sales. B2B within the state. So debtors account debtor, sales account, debtors to sales account, to outward tax liability CGST, to outward tax liability GST. Outward tax liability is nothing but tax on sales. Tax on sales. Tax on sales. This is end customers liability. The customers have to pay output tax liability. Okay, they have to pay output tax liability for both. We collect 18%, but this 18% will be bifurcated into two. Equally 50%. 50% to CGST and 50% to GST. That's all. So when you supply within the state, so debtors account debtor, to sales, to output tax liability, GST and GST. Okay. Then outward supply sales outside the state. Outside the state means interstate. Interstate, here you have to charge only IGST instead of CGST, GST or UTGST. Okay. But when you collect IGST, 50% of the IGST will go to the central government, the remaining 50% of the IGST will go to the state government. Okay. So here also debtors account debtor, to sales, to output tax IGST, to IGST no problem, to output tax IGST. Okay. Credit. So debtors account debtor, sales account debtor to IGST. This is for the entry for outward supplies we have to pass. Outward supplies, sales within the state. Then B to customer. Here B2B. So whenever you do the business will be possible for B2B, B2B and B2C. Here the business will buy or they buy goods from you. Even though you supply goods to one business, it is also sales. Or even though you supply goods to customer, it is also sales. In both cases, sales is common. So B2B and B2C, sales is common. In both the cases, we have to credit sales. Okay. Then debtors account debtor, to sales, to output tax liability CGST, to output tax liability GST. So debtors account debtor, because suppose you collect cash account debtor. Here we assume that it is credit. Why we debit debtors? They are credit supplies. That's why we mentioned here debtors. Suppose you supply goods to your customer on cash, here you have to write cash. Here you have to write cash. Okay. Then outward supplies, sales outside the state, B2B, debtors account debtor or cash account debtor, to sales, to outward tax liability. Outward means output tax liability IGST, because it is interstate. Debtor, creditor. Here okay. Then debit note within the state. Debit note is nothing but it is the additional invoice raised by the supplier to the customers. What is debit note? When the supplier issue debit note, your tax liability is increased. Usually, when the supplier mention wrong number of unit in your invoice instead of actual supply, and the wrong amount of quantity or value is mentioned in your supply invoice instead of original value, and sometimes they charge lesser GST instead of actual rate. So in this three situations, they have to issue debit note. So when they issue debit note, it is also a further sale. You treat it as a further sale. So you have to pass the entry which you pass sales earlier. The same entry will pass here. Okay. So debtors account debtor or cash account debtor, to sales, to output tax liability CGST, to output tax liability GST. Okay. To output tax liability GST. So debtors account debtor or cash account debtor, to outward supplies B2B sales, to output tax liability GST, to output tax liability GST. This is the entry we have to pass at the time of issue of debit note. Okay. Then debit note outside supply, same, but here you have to charge IGST. Already told you, debit note, you treat debit note is a further sale, but it is not a further sale. Already you sell, but you sent invoice wrongly. You may quote lesser number of quantity, you may quote lesser amount, you may quote lesser tax. So these are the reason to raise one more debit note to them. Okay. So debtors account debtor, or cash account, to outward supplies or sales, to output tax liability IGST. So debtors, credit. Debit note within the state, same, debtors, this is B2B, this is B2C. Oh, I think both are same entry. Debtors or cash, to outward supply to output tax liability to output tax liability, CGST and GST. Here the party is customer, here the party is business tax. Then debit note outside the state, B2C, debtors or cash to outward supplies, B2C, to output tax liability, IGST. Okay, IGST. Then credit note within the state. Credit note means when we paid GST more, when we mention, it is opposite to debit note. I mean, excess quantity, excess amount, excess rate is mentioned at the time of issue. This is credit note. So here we have to pass reverse entry. So outward supplies account debtor, output tax liability account debtor, output tax liability CGST, GST, then debtors. Because here the tax liability will be reduced. The burden of tax will reduce. So here we have to adjust, compensate the tax. So reverse entry will be passed. Okay. Credit note outside the state, the reverse entry. Outward supplies, B2B, account debtor, I mean sales. Output tax liability, IGST to debtors. Then credit note within the state. Outward supplies, B2C within the state, the reverse entry will be passed. Okay. Here you have to understand what is debit note and credit note. It is very, very important. Debit note is the further entry will be passed. Credit note, the cancellation entry will be passed first. Very simple. So these are all the 4 items we have to discuss. Sorry, we discussed. Then you have to understand. Next one, credit note outside the state, B2C, same entry. The next one is stock transfer within the state. Inter-branch transfer account debtor to outward supply, stock transfer within the state. Here you need not charge CGST, GST or UTGST or IGST because you transfer goods from one branch to another branch, or it is called mutual transfer. Mutual transfer, no entry for mutual transfer. Okay. But when you transfer goods from one state to another state, suppose you see you have a business place in Chennai and also in Madurai and Trichy. You transfer goods from Chennai to Trichy and Chennai to Madurai. You need not collect because this transfer is happening within the state. So when you transfer goods from one place to another place within the state, you need not charge because it is not a sale. It is not output supply. This is not output supply. Outward supply. Okay, because why? This is not sole consideration. This is not for the purpose of sole consideration. Here you need not collect anything from one branch to another branch. Mutual transfer between one branch to another branch is not a sale. Okay, so this is very, very important. But when you transfer goods from one state to another state, take for example, you are doing business in Tamil Nadu, but you have a branch office in Bangalore. So now you have to charge what? IGST, because this is interstate transfer. Interstate transfer. Even though you are transferring goods to your business in Bangalore, it is interstate. So now both the state ask you to pay tax. Both the state, even Tamil Nadu ask you to pay tax here, and Bangalore ask you to pay tax there. Because your stock transferred from Tamil Nadu to Bangalore. So here you have to pay IGST. So inter-branch transfer, output supplies account debtor to output tax liability, but this is interstate, so IGST is possible. Okay. Advance received from customer within the state. So cash or bank account debtor, GST on advance, GST or HGST account debtor to customers account. To customers means debtors. To debtors. And output tax is GST. Output tax is GST. How to pass? So when we cash and also advance, so we charge GST on advance also. This is very, very important. So GST advance, GST, GST advance, GST. So to customers, to output tax liability, to IGST, to output tax liability GST, to output tax liability HGST. Okay. So this is very, very important. Next one is advance received from customers outside India. Or outside the state. Cash or bank account debtor, GST on advance, name of the customer to credit to output tax IGST. When you import goods or when you export goods or when you do the interstate supplies, you have charge IGST. Okay, so advance is to customer outside India or outside the state. The entry is like that. Okay. Customers advance adjusted subsequent within the state. The reverse entry will be pass. Customers adjusted outside the same reverse entry. Inward supplies purchase within the. So inward supplies account debtor. Here inward supplies means purchase. So ITC interim recovery, ITC for input tax credit, CGST, input tax credit, HGST. When you charge output tax, the output tax will charge at the time of sale. When you charge input tax, the input tax will be charged at the time of purchase. Very simple. Inward supplies purchases outside. Inward supplies account debtor to IGST. When input tax credit is taken, purchases within the state, recovery entry. This is adjustment entry. Then here also. Inward supplies, composition taxpayer. Inward supplies to creditors. Inward supplies, non-GST supplies. Non-GST means you cannot collect both CGST and HGST. So simply you pass entry for the particular transactions. Okay. Exempted also. Inverse nil rated also. In both cases, you need not collect tax. Okay, in both cases, you need not collect tax. Then inverse applies unregistered taxpayer. You have to charge. But here, reverse charge liabilities will arise. Okay. Inverse applies unregistered taxpayers, but the reverse charge mechanism will be applicable. When input tax credit is availed and the reverse charge inverse apply, reverse entry will be passed. IT recovery, ITC recovery, CGST, ITC recovery, GST. To ITC reverse charge recovery, ITC reverse charge CGST. Reversal of input tax credit for inverse applies within the state. ITC reversal CGST account at R, ITC reversal GST account at R. GST ITC interim account CGST GST, then ITC recovery CGST GST, then interest payable. Reversal of input credit for inverse applies outside the state. ITC reversal, GST ITC interim account and payable. Recovery of input tax credit after reversal of input tax credit for inverse applies within the state. ITC recovery CGST account at R, ITC recovery GST account at R, GST ITC interest same entry. Then recovery of input tax credit after reversal input credit output. So ITC recovery, GST ITC recovered account and interim account. So you have to pass. The last one, at the time of utilization of input tax credit, this is the final settlement. I think adjustment of or set off of ITC against tax payable, output tax. Okay, so output tax liability, GST, CGST, GST, IGST, just so recovery. Because already they are in debit, they are in credit. So now they have to debit and credit. Okay. So these are all the entries we have to pass, and finally tell what is the output tax liability of each and every registered taxpayers. Okay, registered taxpayers. So first you have to know, you have to memorize all the entries. At least inverse applies B2B within the state, inverse apply B2B in between the state, then outward supply B2B within the state and outward supply B2B within the state, debit note, credit note. Okay, and inward supplies both intra and inter. Okay, you at least they have to be understand properly. You have to know how to pass entries for them. This is very important. Okay. Since a new financial year is started or starting shortly, this is the right time to revisit the existing ledger account or chart of account and create new one wherever required, and prepare the next GST return filing seamlessly for a finance person or indirect tax person. The heart is the chart of accounts or the ledger account, and if we have this in place, the return filing and reconciliation will be simple. So when you pass the entry in detail for all the inward supplies and outward supplies, along with the debit note and interest and advance, all, there is no chance for, there is no problem for filing the return. So once you have entry in detail, you need not worry about the filing of return. You need not worry about the filing of return. Okay. Now you have to see the manner of utilization of ITC. This is very, very important. Already we discussed in payment of tax here. How can you adjust ITC against output tax liability? If you have ITC in IGST, first you adjust this amount against the IGST payable, and if anything balance, will adjust GST and GST. But here, which one will come first? There is no detailed principles in the GST. Either you go with the third one or second one, as you wish. Okay, as you wish, no problem at all. When you have a ITC in GST, first you adjust GST, and the balance anything is available will be adjust output tax against IGST, not adjust against output tax against GST. You see, so the surplus of GST cannot be placed for the adjustment of GST or UTGST. And when you have a ITC in GST and UTGST, first you have to adjust GST, UTGST, our outward tax liability. If anything balance available, you have to adjust IGST. The excess of ITC of SGST and UTGST cannot be adjusted against output tax against GST. That's all. Okay. So this is very, very important. So this one we are going to apply for settlement or set-off. Okay. You see. Now it is a problem. You have to understand carefully. This problem will help you to understand all the entries and process of payment and process of adjustment and also the final payment. Okay. Pass journal entries of the following transactions. Mr. X purchased goods rupees 1 lakh locally. Locally means intrastate. He sold them for rupees 1 lakh 50 in the same state, intrastate sale. So this is inward supply. This is outward supply. Okay. Inward supplies is nothing but purchase. Outward supplies is nothing but sales. He paid legal concession fee. Okay. He purchased furniture offices 12,000. Assuming CGST 8%. GST 8%. Okay. Suppose he has interstate supply, you have to charge 8 plus 8, 16% IGST. Okay. So now we will see the entry one by one. Purchase account debtor, input GST, input GST, 2 creditors. This is for inward supplies. Inward supplies means purchase. He purchased 1 lakh worth goods. So 1 lakh, 8% of 1 lakh. $8,000. Here also 8% of 1 lakh 8,000. So 1 lakh 16,000 is total supplies. And the second one is sales, inward supplies. Sorry, outward supplies, sales. So debtors account debtor, 2 sales, 2 output GST, 2 output GST. He paid legal charges. So legal fees account debtor, input CGST, output GST, because he availed legal charges. So this is input tax, because he has not given legal service to others, he availed. So this is inward. Whatever may be the inward supplies, we have to pay tax. Whatever may be the outward supplies, we have to collect the tax. Okay, so here you have to understand when we pay the tax, when we collect the tax. Okay, when we provide service, when we supply goods to other, now we have to collect the tax. When we avail service from others, when we purchase goods from others, we have to pay tax. This is called input tax. So tax on sales, output tax, tax on purchase, input tax. Okay. So here 8% of 1,50,000. So 12,000, 150. Okay. The legal fee 5,000, 8% of 5,400, 400, 5,800. And next he purchased furniture account at R. This is also included supplies. 12,000, 8% of 12,000, so 39. Now you have to charge, calculate GST payable. This is output tax. You see, this is input, this is output, this is input. Here also input. You add all the input and all the output and write here. So output tax liability, no output tax in IGST. He has output tax in GST, 12,000, 12,000. Here you take cumulative input tax. CGST 9,360, you have to adjust here. GST 9,003, you have to adjust here. The balance payable 264. You see, when you buy goods for resale, your business. When you buy goods for resale, so now you have to adjust tax on purchase against tax on sales. This is what we are doing here. This is you collect the tax at the time of sale. This is you pay tax at the time of purchase. But you sell the same product for sale. So that's why the government gives ITC to you, because you are going to pay more tax to the government for the same product, because you are not going to use the product for your own use. You are going to sell the product. At the time of sale, you collect more tax and go to pay more tax to the government. That's why the government gives ITC to you. Okay. So what is the final output tax payable in CGST? 2,640, 2,640. Very simple. Okay. This is the manner of utilization. You remember this slide here. Yeah. This is what we use there. Okay. The next one. Past journal entries of the following transaction. Mr. X purchased goods rupees 150 from outside state. So here you have to charge IGST outside, within the state. Sorry, in between the state. He sold rupees 150 locally within the state. He sold 1 lakh outside the state, between the state. He paid telephone bill. He have purchased air cooler locally. No problem. Locally now, you have to charge CGST, HGST. Outside means IGST, because they are the structure. It is a dual taxation system. Okay. First one is purchase. Purchase IGST to creditors, because outside the state. Then within the state sale, data sales, output GST, HGST, 174, 150, 12,000, 12,000. So the next one is sales outside the state. Data's account data to sales account to output IGST. Then paid telephone bill 5,000, input CGST, GST and bank. Purchase of air cooler 12,000, input CGST, input HGST to bank. So these are the entries. Okay. And you have to adjust output tax liability 16, 12, 12. Input tax credit, you take cumulative value, adjust as per the rule. The payable is 16, 3060, 16. The final payment 2640, 10,640. For that you have to pass entry for adjustment. Input GST to input output IGST to input IGST. This is adjustment entry. Set off of input IGST, set off of input GGST, output GGST account data to input, because already they are in reverse side in the journal. This is what the point behind here. So output, this is a credit nature account. Now for cancellation we debit that account. Okay, 93608000, then input GST, then set off. Okay, GST. This is a final payment entry. Output GGST account data, output GST account data to electronic ledger. This is a final payment you have to make. So this is what the methods of passing entry and methods of adjustment and final payment. Thank you. So this is very, very important, because you have to study the you have to know how to pass entries, okay, and also how to adjust, and how to know about the final payment of CGST, HGST and IGST. Okay, so now I will conclude this session. If you have any doubt, you have to arise at the time of conducting webinar.